Hello there, very welcome morning. You're watching Market Cafe on 80 Now. This is Priyanka Uppal along with me, Shriyansi. We get you the cues from global market for next 1 hour. We get you all the stocks that could be buzzing in the trade so that we set you up for your trading day ahead. But then let's understand what are the cues that we gathered from US markets. Morning, Shriyansi.
Well, absolutely. Good morning, Priyanka. Let's take a look at the US markets then, because mixed day on Wall Street is what you're looking at. When you take a look at the Nasdaq Composite, that also joined the S&P 500 in finishing the session in the green, with both lifted by Tesla. That particular post-earnings rally, particularly that we saw coming in for Tesla as well. Shares of the electric vehicle manufacturer, of course, notched that best day in more than a decade. That's the kind of move that you saw coming in for that particular stock, as investors cheered the firm's stronger than expected profit, as well as CEO Elon Musk's expectations for vehicle growth next year as well. So that is painting a good picture for Tesla as well. And that is something that we saw contributing to the Nasdaq as well as the S&P 500 as well. Now, in terms of what other factors were at play, you do have a slide in treasury yields. That is something that also gave the S&P 500 as well as the Nasdaq upward momentum as well. So that is also something that we were looking at in terms of what really happened, because the 10-year treasury yield, of course, notably cooled off from its 3-month highs after breaking above that 4.25% mark previously. And this is something that we've been discussing all through this week. So this is a key move coming in, and that, of course, added a little bit of support when it comes to the Nasdaq as well as the S&P 500. The major indexes, though, are tracking to finish the week with losses. So in the red is where they're ending, which would snap 6-week win streaks for all three. So when you look at the Dow, that's the one that has fared the worst, with a drop coming in of more than 2%, at least as of Thursday's close, while the S&P 500 as well as Nasdaq have shed just about 0.9% and 0.4% respectively as well. Now, investors, of course, will be monitoring earnings reports that are due on Friday. So the ones that are on deck are the likes of Colgate, Palmolive, AutoNation, as well as Newell Brands, and that is something that we're looking at as the earnings season also rolls on. And they will also be following economic data releases on the durable goods and consumer sentiment front. So that largely is the kind of handover that we're looking at least when it comes to Wall Street. But tell us a little bit about crude oil prices, because a slump is what we're seeing there as well.
Yeah, actually it is called crude oil. Because Shriyansi, if you remember, first week of October, where the Brent crude, that rise more than 8%. Now this week, the week gone by, there the price have cooled off 1%. In fact, yesterday also, crude oil prices, they fell nearly 1%. There was a volatile trade on Thursday as well. And now the worries are about the slow economic growth in Europe. That could also reduce energy demand. And we know that, of course, the uncertainty around conflict in the Middle East, that is keeping the traders on edge. And of course, the big trigger coming in, that is US president election. Ahead of this, before this, these moves are crucial because, outcome of the presidential election, that could alter the Middle East oil policy also. So that is why there is a volatile move there. Now, Brent futures, that fell nearly 58 cents, precisely 0.7% to close at $74.38 per barrel. US crude oil, that one also slipped nearly 58 cents, 0.8% to settle at $70.19. The way I mentioned that, the weekly moves, we talked about October 4th, there was an 8% move, but then here in this week, when we've seen that some sort of easing on the Middle East, because, Iran would attack Iran's oil infrastructure, that was the key trigger, which was driving the fuel up there. Now we've cooled off. Last week, it cooled off nearly 8%. Talking about the gold also, gold prices also, did rose yesterday as much as 1%, because of course that's a safe haven to trade near record high. Now this safe haven demand from persistent geopolitical concerns, that has bolstered the price. But you keep a check on another metal, precious metal, that is palladium, that saw an 8% surge, and the concerns were of supply sanctions on top producer like Russia. Spot gold was up 0.7%, nearly $2,736. That is 16 ounce, having retreated from record high of $2,758 on Wednesday.
Well, absolutely. Let's also take a look at the key events that you should be watching out for. So when you take a look at global cues, of course, you do have from back home, you do have forex reserves. But from the US also, you do have Baker Hughes oil rig count that we're keeping an eye on, along with Michigan consumer sentiment, as well as the Fed's balance sheet. That is also something that we're keeping an eye on. And in terms of global earnings, of course, apart from the ones that I mentioned earlier, there's Mercedes-Benz, Sanofi, as well as Colgate Palmolive. That's the one that I've mentioned already. And when you take a look at earnings back home, then in terms of the Nifty companies, you have a long list. So Coal India, JSW Steel, Bharat Electronics, BPCL as well as Shriram Finance are the ones that are making it to that list. And Shriram Finance is making it to another list in terms of what to watch out for in terms of corporate action, because the board is going to be mulling a stock split. So that is the stock to keep an eye on when it comes to the stocks you should be looking at. Of course, in terms of what other news and updates we have, there's of course the last day to buy shares to be eligible for dividend for Dalmia Bharat. So that is also the counter to watch out for. Apart from that, in terms of other events that you should be keeping an eye on, Bank of England Governor Andrew Bailey will be speaking. So any sort of cues coming in from his speech are going to be something that the market is really going to be watching out for as well.
All right, so now let's get you some more macro stories, global stories, and that's the big one coming in from the economic data from US, and that's US unemployment claims. That has dropped sharply by 15,000 to 2,27,000 last week, well below expectations. Now this data again signals continued labor market resilience despite the high interest rate scenario. However, more people were collecting benefits in mid of October, which raises the risk of a rise in jobless rate this month.
All right, moving on then, in more macro data, US manufacturing showed signs of stabilization as the PMI edged up to 47.8 in October, still signaling contraction but at a slower pace. Meanwhile, the service sector is driving growth, with the composite PMI rising to 54.3 despite ongoing election uncertainty as well. In housing, new home sales surged 4.1% in September, hitting a 16-month high, surpassing forecasts.
Mixed sort of data coming in, but then moving on to some news from the banking space. British bank Barclays, that soared to a 9-year high after third quarter profit that jumped nearly 23%. Now, this has beaten the expectation. This was driven by robust growth in its trading business. This beat helped the management up its income guidance for this year as well. Meanwhile, a few days after Disney appointed Morgan Stanley's Gorman as its CEO, the investment bank has appointed the Ted Pick as his next chair. Pick joined Morgan Stanley in 1990 and ran equity capital markets during the financial crisis.
All right, then moving on, let's delve a little deeper to what happened with Tesla as well. An earnings beat and a bullish commentary boosted Tesla shares to their best session in over a decade. And more interestingly, this rise also helped increase Elon Musk's net worth by $26 billion in just a single session. Remember, he's already the richest person in the world, with his net worth now standing at $269 billion. He owns about 13% of the EV auto giant.
And despite asking for a pay cut after the major security gaffe at the company, Microsoft CEO Nadella, total payouts jumped over 60% to almost $80 million, and this is on the back of stock awards. Still, $5.5 million less than what it would have been if not the pay cut.
Right, moving on then, in what could be another sign of slowdown in the auto sector, Harley-Davidson has cut its full-year revenue forecast due to weak demand, citing inflation and high borrowing costs. Now, North American retail sales plummeted 10% despite beating Q3 profit estimates as well. The company expects global shipments to fall 16 to 17% and retail sales to decline 6 to 8%, marking the second guidance reduction this year.
Okay, and now let's get you an interesting research point from Sumit. The results of US elections will shape the trajectory of India-US relations at a very crucial juncture. Just when the global economy is trying to turn a page and leave the scars of pandemic behind, how will India-US ties shape up with the outcome of elections? Let's take a look at this special bureau report.
Republicans led by Donald Trump or Democrats led by Kamala Harris. The whole world is watching, and so is India. As Americans prepare to hit the polling booths, Donald Trump and Joe Biden have both left their imprints on Indo-US ties. Donald Trump was always seen as favorable to India and Indian interests globally. Trump's criticism of Pakistan for supporting terrorism and China for its predatory economic and trade policies provided a boost to the India-US relationship. In November 2017, former First Daughter Ivanka Trump visited India for the Global Entrepreneurship Summit, a framework started by Obama. Trump also revived the Quad that includes the United States, Australia, Japan and India. Donald Trump-led administration also used its executive authority to designate India with the Strategic Trade Authorization 1 status via a federal notification. Donald Trump not only wanted to be close to India but also to be seen as close to India. In September 2019, the then US President hosted Prime Minister Narendra Modi in Texas at an event attended by an estimated 50,000 people.
Mr. Donald Trump, a sense of leadership, a passion for America, a concern for every American, a belief in American future and a strong resolve.
But Trump was not kind when it came to trade tariffs. The jolt came when he labelled India as the tariff king and threatened to impose reciprocal tariffs on Indian products. But if Trump was supportive of India, his successor Joe Biden had his own way of deepening ties in defense, trade, health and climate change. After coming to office in 2021, the Biden National Security Council took forward several path-breaking steps. An initiative on critical and emerging technology, also known as the ISET, was launched in January 2023. This included exploring cooperation in artificial intelligence, quantum tech, cyber, 5G, 6G, biotech, semiconductors, defense and space. India has also gained considerable strategic significance during Biden administration, mainly due to China's rise and increasing assertiveness across Asia. The Biden administration continued the Trump administration's 2018 initiative of holding 2x2 meetings of foreign and defense ministers. Biden also continued with the Quad, increased sales of defense products, boosted joint drills, and extensively shared intelligence with India. Under Biden's presidency, the two sides have also revived a number of platforms, including the India-US Trade Policy Forum, the India-US Commercial Dialogue, and the India-US CEO Forum. Under Biden's presidency, Indian PM Modi also addressed American Parliament.
In the past few years, there have been many advances in AI, artificial intelligence. At the same time, there have been even more momentous development in another AI, America and India.
A recent report by global financial services group Nomura said that President Donald Trump will be beneficial for India. The report added there can be possible frictions in bilateral trade due to Trump's policies, but these can be outweighed by supply chain benefits. The election outcome is not certain, but what's certain is that India-US ties will continue to deepen.
Alright then, that was a special report coming in when it comes to the India and US relations. But time for a very quick breather on the show. When we come back, we take a look at how the Asian markets are faring, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET now. Let's get you the cues from Asian market. Asia Pacific market have opened slightly mixed today. But then the big set of cues has to come from the Japan's general election over this weekend. Along with Japan has released its inflation data also. Now the headline inflation data, which has weighted on, of course, Nikkei also, now it's falling more. When it opened with a cut of 0.5%, but post the inflation report, it has fell more. Now inflation that has fell to 1.8% in October month from earlier month, which was at 2.2%. Though this is the lowest figure in last 6 months. Now, core inflation, which stripes out the prices of fresh food, also coming in at 1.8%, which is down from 2%. And this is the key metrics for Bank of Japan also, let's not forget. So Nikkei trading with a cut-off, with a loss of, it's closer to 1% now. But then talking about other indices, topics which was down nearly 0.5%, 0.4%. That's on the face for the fifth straight day of losses. You talk about other indices from Asian markets, South Korea's Kospi, that one seems to be down by nearly 1%. Small cap Kostak, that looks like that has given us a green signal. That has risen 0.5%. But Hang Seng, that the future were indicating a good start, and they have also opened with a gain of 0.5% on Hang Seng. Yes, Hang Seng is 0.5%. So mixed set of cues coming in from Asian markets now. A lot of things depend upon how the general election, the outcome that pans out over this weekend. We get the cues next week. But talking about the Australian market, ASX 200 that started the day with a gain of 0.5%. And talking about the GIFT Nifty, what are the cues that we had? It largely seems to be flattish cue coming in from GIFT Nifty for now. So these are the cues from Asian market.
Well, absolutely. Let's really see how the day in trade really pans out for us. But moving on, then pickleball has become one of the fastest growing sports worldwide, which has no age or gender restrictions. The ultimate pickleball slowdown has begun as the PWR DUPR India Masters is underway in New Delhi, the national capital. Here's a special lineup of interviews with tournament organizers as well as pickleball players. Take a look.
RK Khanna Stadium is buzzing as the PWR DUPR India Masters event marks a major milestone for pickleball, exciting fans across India. Pickleball, a blend of tennis, badminton and ping pong, is also gaining global recognition.
This game is really a community game. We have huge number of players who play this game. So it's a task managing so many people, and 750 is not a small number. So when we start off with the tournament, we need to decide how many courts and all that we need, how many volunteers. So we have a big team of people here, right from scoring to scheduling to ensuring players are taken care of. So it's a task, but it's super fun.
Since COVID-19, pickleball has surged in India, embraced by communities from metro cities to Tier 2 and Tier 3 towns.
I'm loving it here. All the courts here are really nice. The facility's really great. The players, the competition's great here, and just great experience. So ever since I was younger, I played sports. Ever since I was the age of 2, I was really competitive, and I just started switching over to pickleball around 11 years old, and I've just been practicing, working really hard. And the community is so nice. They're allowing kids playing with older people, and it's just a really great experience. And I just thank everybody letting me be able to play with them.
Pickleball hooks you for life. It's more than a game, it becomes an obsession.
I'm very, very excited for the week. Can't wait to play mixed with Helena and my just newfound men's doubles partner, Kenta. Super excited.
Pickleball's inclusivity is its strength. There's no age or gender limit. The earlier you start, the better. In the next 5 years, pickleball is set to carve out a permanent place in the hearts of sports enthusiasts across India. Its rise is only just beginning.
Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates, and onto an ET Now exclusive then. Bharti Enterprises may have finalized a buyer for its stake in Del Monte. Now, sources tell ET Now that Samara Capital-backed Agrotech Foods is in advanced discussions to acquire Bharti Enterprises' stake in the company as well. In fact, Sumita Karir is standing by with more details. Sumita, tell us a little more about this. What's at play? What's in the works right now?
Well, yes, sources say that Samara Capital-backed Agrotech Foods is in advanced discussions to acquire Bharti Enterprises' stake in Del Monte Foods. Bharti is seeking to sell its 50% equity holding in Del Monte Foods, and these discussions between the two sides, that is Bharti and Agrotech Foods, on the deal size are currently in the final stages. Sources also say that while Bharti is looking to offload its 50% equity holding, the remaining 50% of the shareholding will be held by Delmont Pacific. Bharti, remember, focuses on telecom and broadband as its core business areas. It views Delmont reportedly as a non-core part of the business, which is part of Bharti Enterprises. Moreover, Delmont really has not been able to compete with larger packaged foods businesses. It has products like ketchup, dried fruits, juice drinks with supply to QSR, airlines and other institutional channels. However, it's not yet clear whether the company wants to scale down its India operations. Now, as a precursor to this development, which could be in the works, funds which were advised by Samara Capital, Convergent Finance, have recently acquired controlling stake in Agrotech Foods. Again, that company that is looking to acquire that stake. And ET now sent out queries to the companies involved, that is Bharti, Samara Capital and Agrotech Foods. They are yet to respond to our emails.
All right, Sumita, keep an eye on this. Let us know about the important developments on this. Moving on, NVIDIA is holding an AI summit in India where it announced its AI model with Hindi language support, now dubbed as the Nimitron 4 Mini Hindi 4B with 4 billion parameters. That the company, along with other IT majors, is eyeing India's AI market, which is estimated to be with an immense growth potential. The AI Bellwether's CEO, Jenseng Huang, was present at the event. He talked about partnering with other Indian IT firms like TCS, Wipro. He also caught up with Mukesh Ambani of Reliance Industries. Let's get you an excerpt from this.
While I was listening to you, you talked about NVIDIA being an exotic place. And I was thinking that when you are in India, I've got to give you my version of what NVIDIA means to me. And I was just thinking about it backstage. There's a very important word linked, which is called Vidya, Vidya, right? And in Indian, in Hindi, as we are all determined to make the best LLM in Hindi, right? In Hindi, Vidya means knowledge.
I knew I named the company right. I knew it.
So
everybody said, NVIDIA, what a horrible name. You will never make it.
So what it means...
I knew it. I stuck with it.
So you can take credit for this interpretation.
Gosh.
No problem. Right? So it still is
I'm smart.
It gets better, Jensen. So if we think about Vidya, Vidya is Saraswati. And Saraswati is our goddess of knowledge. So when you actually devote yourself sincerely to the goddess of knowledge and you acquire knowledge, then in our tradition, the goddess of prosperity, which is Lakshmi, follows. So what you are doing...
32 years ago, I knew this.
So
and now the story of NVIDIA has been revealed to all of you.
So our first principles, right, are what you are driving.
Thank you.
Is the knowledge revolution converting into the international, into what I call the intelligence revolution. And that drives prosperity across the world.
All right, and that was a slice of that interesting conversation that NVIDIA CEO Jensen Huang then had with Reliance Industries top boss. Moving on, then ITC delivered a mixed show when it comes to the second quarter. Mixed, of course, on account of that sharp 400 basis point contraction coming in terms of the margins. Additionally, the board also has given a go-ahead for the EIH Hotels buyout as well. Let's go across to Snehi for that fine print of those numbers then. Snehi?
coming in for ITC this time around, but overall it's been a resilient performance despite headwinds. If you take a look at these numbers on a standalone basis, revenue has come in at 19,328 crores, which is an uptick of 13.7% on a year-on-year basis, and compared to our estimates of 18,068 crores, it's a beat coming in on the revenue front. Taking a look at the EBITDA this time, 5,078 crores, which is an uptick of 3.3% on a year-on-year basis. Compared to our estimates of 6,506 crores, it's in line. Net profit also in line with our estimates, 6,335 crores compared to 6,295 crores this time last year, an uptick of 0.6%. We were expecting 5,079 crores, so it's largely in line. However, what has been a miss this time is the EBITDA margin number, because that has just come in at 32.8% compared to 37% last year, and we were expecting 35.6%, which means it's a miss on that front. Now, if you take a look at the segmental differences and the segmental businesses, FMCG business has demonstrated resilience amidst muted demand conditions. It's been led by innovation and a slow of innovative product launches as well. When you take a look at the FMCG business, the total FMCG revenue growth came in at 6% versus our poll of 6.5%, so largely in line. You had staples, biscuits, snacks, frozen snacks, dairy, premium soaps, home care, agarbatti. All of these have driven growth. If you take a look at the cigarettes business, net segment revenue is up 7.3% year-on-year. Now, severe cost escalation in leaf tobacco was partially mitigated by improved mix, strategic cost management, as well as calibrated pricing actions taken by the management. Moving on to the hotels business, the segment revenue was up 12.1% compared to our poll of 10%, which means healthy growth on this front, and hotels has grown despite a higher base. Agri-biz also has shown strong growth coming in this time around. The segment revenue was up 47% year-on-year, led by leaf tobacco and value-added agri products. Lastly, let's take a look at the paperboard segment. The segment revenue is up 2.1%. We were in fact expecting a cut of 4%, so it's done better than our expectations, but however, subduedness continues in this segment. Also, talking about the acquisition, they've approved the acquisition of 1.52 crore shares of EIH and 34.6 lakh shares of HLV, post which the company shareholding will be 16.13% and 8.11% in each of these companies respectively. Quickly marking what brokerages are making of these numbers, you have a Goldman Sachs note coming in. They've maintained a buy rating, hiked the target price to 525 from 515. They believe Q2 has been a steady quarter despite a tough consumption environment. Good growth has been seen on the cigarette business. FMCG business margins have come under pressure from rising input costs, and agri business has had a strong quarter. Paper business has weakened. Hotels remains healthy, but overall, well, yes, it's a mixed set coming in for ITC.
Mixed set of numbers which ITC reported. In fact, FMCG has been, that cord has stuck for many of the other players. But do tell us for Godrej Consumer also, of course, Snehi, the way the margin expanded, was it a mixed set of number? And what are the brokerages, voicing their take on this?
Well, absolutely. So when you talk about Godrej Consumer Products Limited, commonly known as GCPL, it's been an inline set of numbers coming in for this company. You have revenue, EBITDA, PAT margins. All of them are in line with what we were expecting at ETA now. Revenue has come in at 3,666 crores. It's a 1.8% year-on-year uptick. EBITDA at 760 crores, almost an 8% year-on-year uptick. Net profit has come in at 491 crore rupees, which is a 13.5% uptick on a year-on-year basis. EBITDA margin has also expanded sharply. In fact, not sharply, but it's expanded slightly, 20.7% compared to 19.5%. So it's a more than 100 bips rise coming in on that front, and largely in line with what we were expecting at 20.8%. Now, if you take a look at their India as well as international business, let's start with the India business. India sales and volume both have grown up by 7% year-on-year. However, for volumes, we were expecting a 7.5% growth, so that's in line. But for the sales figure, we were expecting a 8.5% growth. It's come in at 7%, so slight miss on that front. Home care segment has grown by 12%. Household insecticides volume grew in mid-single digit, and you had air freshener and fabric care both have delivered strong double-digit volume growth this time. Personal care, this one has been a slightly subdued segment for the company. It grew by 7%. We were expecting a growth of, it grew by 3%, pardon me. We were expecting a growth of 7% this time for this segment. Personal wash delivered flattish volume growth, and the management has decided to not pass on the entire hike of the input cost that they have seen. They've decided to not pass this as an entire price hike to the customers all at once. Hair color segment did well. That grew in double digits. But now let's shift focus to the international business. For Indonesia, the sales were up 11% in constant currency, 9% in India terms. Volumes were up 7%. The India sales were impacted due to currency depreciation. When you take a look at the GOM sales, which is the GCPL, Africa, USA and Middle East, organic sales were flat constant currency terms, but down 10% in INR terms due to currency volatility. Lastly, let's also take a look at what brokerages are making of this. You have a Goldman Sachs note coming in. They've maintained a buy rating, but they've cut the target price from to 1500 rupees compared to 1525 earlier. They say that the industry beating in volume growth continues for this company. Green shoots are seen in the home insecticides business after the launch of a new molecule. Indian EBITDA margin will continue to be under pressure for 2 quarters due to palm oil inflation. The international business is on a strong growth trajectory is what they're pointing out. But overall, inline set of numbers coming in for GCPL.
Thanks, Nehi, for that update coming in. So there you go. That's the update when it comes to ITC as well as GCPL's Q2 numbers. But let's keep it going with earnings. Then IndusInd Bank's second quarter numbers were an overall miss. Net income was down 39% on a year-on-year basis. And non-performing assets as well deteriorated marginally, at least on a sequential basis. Gaurav is standing by with more on the earnings fine print there. Gaurav?
A very weak set of numbers is what we are seeing from IndusInd Bank in this quarter. When we talk about net interest margins that have deteriorated almost by 17 basis points, and when we talk about net profitability, that has gone down almost by 39%. So first, let's look at the numbers and how it looks. First, let's talk about net interest income that has gone down almost by 1% on a sequential basis. What they say is that there was a slowdown in growth in unsecured book. That is the reason why we saw net interest income going down, and that is the same reason why we saw net interest margins going down partially. Other than that, when we talk about PPOP, we saw a fall of around 8%. Now what they're saying is that the cost or income ratio remains elevated and looks elevated because of the lower profitability that we have seen in this quarter. But overall, when you look at the PPOP, the same flow has been there as well. When we talk about net profit, that has gone down almost by 40%, and the main reason being the credit quality. What happened in this quarter is that the MFI segment, which is microfinance segment, is seeing a sharp rise in stress, and that is the reason why we saw provisions going up. Let's not forget that bank made a provision, additional contingent provision of around 500 crore rupees towards this book, but overall, even if we exclude that, the credit cost has come to 1.5%, which is higher than what the street was expecting. Other than that, when we talk about slippages, there also we saw a sharp uptick, and that is the reason why we saw this sharp fall in the profitability of the business. When we talk about ROA also, that has gone down to 0.99%, which is at the lowest level since March 2021. Other than that, when we talk about management commentary, what they have said that in terms of advances growth, we may not see the 18 to 20% growth in this year that we have seen for the bank for the last few quarters. On the MFI segment, what they're saying is that there is stress which is building up throughout the industry, but they are being a little bullish on MFI segment. They see that after Q3, we may see some recoveries and we may see the positive outlook coming up on MFI segment. But overall, what another concern is that when we talk about the SMA book, there also we have seen an increase in 30 to 90 days pool. Now what happens is that around 60 to 70% of this pool goes to the NPA segment, and that is the reason why there are some concerns rising there as well. When we talk about brokerages now, they are also being a little bearish on the stock. What we saw is that when we talk about Investec, they have maintained their hold rating but cut the target price to 1410 rupees. When we talk about IIFL, they have cut the target price sharply to 1300 rupees versus what it was at 1590 rupees. When we talk about Nuvama, there also we have seen a target price cut. They have cut the target price to 1290 rupees. And lastly, when it comes to Nomura, they have also cut the target price to 1220 rupees. So overall, a very pessimistic view coming up on IndusInd Bank. Numbers were also very weaker than what the street was expecting. On the back of this, when we talk about management commentary, although it seemed a little positive, but overall a weak set of number is what we have seen from IndusInd Bank in second quarter.
Right, so weak set of numbers, brokerages cut the target, and of course, the kind of bullish comment they've made on MFI segment, I don't think so that's big enough. But then let's see how much pressure it will create on the stock today. Stock was sliding from last 2-3 days, what we've noticed. Thanks very much, Gaurav, for all that detail. But then let's get you across Sumant Katpalia, who's the MD and CEO of IndusInd Bank. We did caught up, to gather a reaction on the numbers, what he has to say. The commentary, of course, is not very bullish. Let's go across.
MFI business will only have a recovery of 7 to 15% depending on the early. So early stages will have about 15 to 20%. 1 year older cases will have about 5 to 7%. This quarter is very critical. I think we have to wait and watch and see how the disbursements pick up this quarter. This is a festival season. Always these 2 quarters have been very good quarters for MFI historically. Now, given the stress which has appeared in this segment, we have to wait and watch and see how the MFI segment plays out. Given that four NBFCs have been banned from doing this business or are not adding new customers into this. So we have to wait and watch. We are cautiously optimistic on the microfinance. We like this business. We believe that this business has turned around.
Alright, and that's the word coming in from the management of IndusInd Bank. Moving on, then let's go across to Sumant Katpalia, MD and CEO. That's the one that we just heard, of course. So that was the word coming in on the earnings fine print that the management was just talking to us about. But now let's get you a glimpse of our very special Diwali programming. We had a very special chat then with Motilal Oswal Group's Ramdev Agarwal on the Samvat gone by. Let's listen into a slice of that interesting conversation.
Always have a fixed rate, 15%. It's a wonderful rate to have. This is a 15% country, I'm telling you. I mean, 40 years, 30 years, 25 years, you do it, it's all anywhere between 14 to 15%. You know, even 5 years, post-COVID, 5 years pre-COVID, just about 90 to 24. It is 111% for last 5 years. So it works at about 16%. So the moment you do five years, you are set. You will be about 14 to 16%. You know, so if you think market is high, you might make 14%. If you think market is low, see market goes down by another 10-15%. You are set for 16% kind of return.
But next 3 to 5 years, the CAGR to your mind, now whether it is 11 or 15, that's the base effect and that's the market cycle impact. But the probability of getting double-digit returns on a CAGR basis the next 3 to 5 years from equities is reasonably high.
Now now you ask about probability. Next year, 15% return, probability, I have no idea. It can be 0, it can be, it can be anywhere. It's a toss of coin, 50-50, okay? You go to, say, 5 years, double-digit return, 10% plus, I would say 90% chance, okay? If you go to 10 years, 14-15% return, like probability is like 98-99%.
Okay, great. Second, I'll move to what defines return, ultimately is growth and earnings. We've discussed India's GDP growth, you've given us the numbers. Let's understand earnings. For the second quarter on the trot now, earnings are down. The slowdown is visible. You can smell it and you can feel it. Do you think this is a temporary blip in earnings? Will earnings revive? And if they will revive, what will drive the earnings?
Yeah, so people who know of things, I'm not a macro guy, so I keep hearing the chief economic advisor or RBI or our FM, whatever they say, we have to, because they're talking from data and their understanding of things, and they are going to make things happen. So RBI just said that they still stick to 7% kind of growth projection. They are the guys who are doing the numbers. They are the economists on the ground and everything. So they are saying that first half was impacted by weather and all sorts of things, and also election. So that slowed down the government expenditure big time. Okay, so I think second half will be best of government expenditure and private capex, whatever it has to pick up, and consumption. So all cylinders should fire in second half. So I would say Q3 and Q4 should be better than first half of the earnings. That's what is being touted by regulators or people who know of things. So clearly second half should be better, and then it should pick up. So a lot of things are going to happen in the sense that policy decisions will happen. Why should we think that nothing will move? Rate cycle is all over the world, it is coming down. Okay, RBI is saying that they will not make a hasty move right now. But direction is very clear. Maybe if not in this 2 months, then after 4 months, 5 months, it will happen.
Well, that's a slice from our special program, special Diwali program on ET Now. Stay tuned for the complete shows. But we stay for a short break here. More to come on the other side of the break.
Thank you so much for staying tuned in. Well, let's get you the stocks that you should be watching out for in today's trading session. Firstly, let's take a look at NTPC, because that's the one that reported a revenue with a downtick of about 0.6% coming in, at least on a year-on-year basis. When you take a look at the net profit figure as well, you're looking at an uptick coming in on the flip side of just about 14.3% on a year-on-year basis. So that largely was the handover when it comes to NTPC. That stock is going to be the one to watch out for, along with Dixon Tech, because that reported numbers that beat estimates largely. When you take a look at the revenue, you're looking at an uptick coming in. In fact, the revenue largely soared. It was at 11,530 crores. And after that, of course, you should be watching out for Cyient as well. But with that, we're completely timed out on this segment as well as the show. And thank you so much for tuning in to Market Cafe. Don't go anywhere, because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.